So what is the impact if our markets are up and down? It doesn't mean it's a entire impact on whatever the scheme we are invested. The same thing, suppose if I'm taking in the 2020 year, within 4 months only it has been picked up. Whenever we seen some drastic down in our fund performances, right? Even in the mutual funds also. So that will be covered up mostly within 4 to 6 months. My friends, hope all are doing good. Thanks for your valuable feedbacks and support to our podcast. Some of the videos it's already reached to the views of more than 500. Thanks for your wonderful support. So that is also a very short period, like 3 to 4 days out. Okay. Yeah. So today we'll discuss about what is the impact if our markets are up and down. Okay. So this is the generic term we are always using in the society, especially for mutual funds, shares and all. Right. See, as you know, mutual funds are not investing in the all the shares. Like we have the more than 6,000 shares, right, in the market, including NSE and BSE. See, entire 6,000. So no company is investing, right? Hardly 150 or 100 plus. So this is the maximum range generally. Every company and every mutual fund scheme follows. Right, very rare case it will cross the 150 companies. So that is also depends on the fund type. So they will segregate the things to the gold, real estate, government sector bonds, treasury bills, corporate bonds. So various things, right? So in such moment, actually, we are not supposed to say. So it depends on the market, right? So entire place we are not investing, right? Suppose if you are taking the example of a COVID situation, right? Everyone didn't get the COVID, right? Maybe 20%, 30% people got that. But if you are another example, if you are taking for the children, right? Generally, when the marks are coming after their final exams, right? Like PUC or maybe board exams or engineering exams. So we used to call some generic term, right? Maybe this time marks has been reduced. Maybe students are not performed very well, right? So these are the generic terms we are using, right? That doesn't mean each and every student is not done very well. All right. So that is the average concept. Here also in the mutual funds, when we are talking the markets, it doesn't mean it's a entire impact on whatever the scheme we are invested. Right. So there is a lot of times, see, maybe Nifty 50 got down, but what about other shares existed in the NSE? They given the profit, right? So whoever in the share markets are regularly watching all these market instruments, they know all these things, right? But to understand the people, say as a generic word, we used to talk as the market, right? But that doesn't mean if the market is down, so our mutual funds also getting down, right? Just completely depending on the where we are invested. I mean, where we, in the sense, the fund manager, he has invested as per the diversification. So whatever the strategy he has applied, right? Which are done the companies, he has done the investment for that particular fund. Okay, that's always individual thing only. Okay, fine. So as a generic term only, probably we will consider. So if the markets are up and down, what is the things it will happen? Whether it is beneficiary to us or maybe are we losing anything? Okay, so let me share my screen. So as seen in this particular slide, see around 2014, the Sensex was around 25,962. Okay, so in the 2018, it reached to the 36,000 change. So almost time period of 4 years, it's to reach to this level. Okay, around 11,000 points, it's increased, right? The same thing, suppose if I'm taking in the 2020 year, within 4 months only, it has been picked up, The same kind of scenario. So earlier it took the 4 years, but here it's took the just 4 months only. Right. So similar kind of the examples we've seen recently in the COVID time also. Right. When the COVID started, the market has been down very drastically. Right. So almost to 2 months, it's went to the very down levels also. Right. Within 3 to 4 months, once again, it's picked up, and now the Sensex range is the more than 74,000 now. Right. Even NSE already crossed 22 or 23. Right. So whenever we seen some drastic down in our fund performances, right? Even in the mutual funds also. So that will be covered up mostly within 4 to 6 months, or even lesser than that also. That kind of possibility it is there. So you need not to worry. So my value has been reduced. And once again, I am keep on telling, see, it is not happens to the all the funds, whatever the fund you are select. There is no guarantee. Okay. So that's the reason we are keep on stretching. You always align with the or have the tie-up with the certified and right financial advisor. Okay. To avoid a lot of risk. Already we made one video why we needed the certified advisor. Okay. So what is the next thing? See, maybe we are considering the market rise and market fall, whatever it's maybe. Maybe that is for the very short duration or maybe very long duration, whatever it's maybe. Okay. But in the mutual funds, if you are considering the SIP, right, you will get a lot of benefit. Both the scenarios, either market rise or market fall. Yeah, sometimes in the lump sum also we will get, but the majority of the times we will get that kind of benefit in the SIP only. See, because of the rupee cost averaging. Okay, this is we are doing in the monthly investment basis. Let's we have one example how it is a beneficiary for us. Just I taken the 4 to 5 months one example with some NAV. So NAV already people know, right? That is the unit cost. So based on the unit cost only, the allocation is happened to the whatever the investment we done. So here I haven't considered the stamp duty 0.005% to make the calculation very simple for you. Okay. See, maybe whatever the year it is, suppose in the August month, I have invested 1,000 rupees. So that time NAV cost is the 20 rupees. Out of that, how many units I'm getting? 40 units. Sorry, 50 units. Right. That time, what is the value? 1,000. Right. See, when we are invested, obviously same valuation it will be there. So whether it will be increase or decrease. So based on the number of days, it's moved out. Right. I mean, it's spending the time over here or investment duration over here. Right. So I have considered this SIP for the 5 months continuation. So in the September month, somehow the unit value has been increased to 25. Right. So it's the same SIP I'm continuing here. Okay. So what is the units I got here? 40 now. Because of NAV increased, the number of units has been reduced. Obviously, what we will think? Maybe I lose it something. Right. Who knows all these calculations, how the units calculation will happen. Right. So, but if I'm taking the current value, it's become the 2025, sorry, 2250. See, my investment is the 2000, but already I got the 250 rupees profit here. How? Whatever NAV it is increased, right? This is applicable for the this both the investments. Like suppose if you want to take the general example, so majority of the people understands gold, right? Is a very easy. See, suppose I purchase 1 gram cost 5,000 rupees in 1 month. In second month, maybe I purchased 1 gram cost at the 6,000. Just one gram only you can take. The third month, the gold cost is increased to the 7,000 rupees, 1 gram cost. So this 7,000 is applicable to the last 2 months, or maybe this month, whatever I purchased for that month only. No, right? Whatever the previously we purchased, also whatever the rate it's maybe, that is applicable to the current rate, whatever it is. The similar fashion, it is applicable here. Okay, so that's the reason when the market is up, right? I mean, you meant to say NAV is up for your particular scheme. Obviously, your valuation will be increased to the your previous investments also. You should not think out maybe I got the lesser quantity of the units over here. That's a big myth or big mistake generally people are thinking. Okay. So maybe in the October month, the NAV has been reduced to 2 rupees. Right. For the same 1,000 rupees of investment, little bit units are increased here. Okay, compared to the September month, around 3 point something, the units has been increased. Right. What is the total valuation? 3,069. Out of our 3,000 rupees investment, 69 rupees has been increased. Maybe the increment is very less. Okay, compared to the September month, but you are not in the loss. Just this is only showing example, right? So first month NAV is normal since we are purchasing that moment only, right? That moment we can't say whether NAV is increased or decreased or not, right? So in the next months, it is increased drastically. Another month, it's a decreased somehow, right? Maybe November month, once again it is increased to 25 rupees. So that moment, once again, I got the 40 units only. But what is the valuation of my total value? 461 rupees has been increased here. See, maybe fifth month there is no change. See, generally it won't happen in the mutual funds. That kind of things generally 1 or 2 days only it will happen, not for the entire month. Okay. Suppose I consider the fifth month, there is no changes. Once again, it is 25 rupees only. Okay. So then what happened to my entire value? 5,461 rupees. 461 rupees profit I got for my entire 5,000. Right. So this is what the benefit. Hope you understand how this is working. So in the mutual funds, especially if you are taking the SIP, right? So whatever the amount it is, whether it is 1,000 rupees or 1 crore rupee or 10 crore rupees or 100 crore rupees, whatever it may be. So the rupee cost averaging is working like this. And even the compound effect also it's working. Okay. So basically, by any chance, markets are getting down. Markets in the sense wherever the companies are, I mean the mutual fund, the particular mutual fund company and the particular scheme where they are invested, right? That's got down due to whatever the reason it's maybe, right? That performance has been down. That moment what happened? What is the benefit we are getting? We are getting more units. Okay, suppose the NAV is increasing. So what is the benefit we are getting? The entire valuation of whatever the till now investment happened and whatever the investment we done currently as well. And I mean previous invested and currently invested also, the value gets increased. Okay. So this is what the benefit from the SIP. Okay. So in the next video, we'll see whether SIP is good or lump sum is good. So what is the difference? Right. So majority of the clients, majority of my clients is to raise these kind of questions. Right. Hope you enjoyed the video and it's given the certain idea to you. Right. So actually these under calculation is not required for us, but to make understand how the things are, it is working in the mutual funds. Right. Some people may understand easily. Some people thinking why we want to calculate all these things, why these unnecessary things and all. Right. If you understand properly, you'll come to know these volatility things and your additions will be proper. And whatever the handhold the certified advisor wants to give to you, you are able to catch up that. Okay. Otherwise, you will miss all the opportunities. Whatever the entire returns, entire benefits you're supposed to get. Okay. So thanks for watching this video. Please do subscribe to our channel and please do the like as well and provide your valuable comments and feedback suggestions as well. And please share with your near and dear as well and help us to fulfill our mission. As you know, our mission is we want to involve the entire India and throughout world if our people are existed. So those people's involvement also we are encouraging to participate in the mutual funds with the amounts whatever it is possible for them, either minor or bigger amounts, lump sum amounts or mix up of amounts, whatever it's may be. But our mission is everyone has to involve in the mutual funds. Okay, thank you.